Happy Monday to you. We'd like to welcome you to Trading with Technical Indicators. My name is James Boyd. Alongside with me, my good friend Ben Watson in the chat. And we'd like to also welcome Michelle, Paul, Kevin, Silas, Jay Richardson, High Speed Low Drag, Go Buckeyes. Boy, that was a good game on Saturday, right there in the Husky Stadium. If you haven't been there, that's a nice stadium. And Heather, Josh, and many others. Welcome to all. Now, just real quick reminder, we do post educational content also on X, formerly known as Twitter. There's my handle at JamesBoydCS. Ben will post his handle in the chat. Thank you for that. And also, just real quick as we get started, want to give us a quick reminder that with what we discussed, and we're going to discuss here today, cup and handle patterns. We're going to talk about weekly charts. Because when you really look at the charts, whether you look at the Dow, the S&P 100 or 500, and the NASDAQ, really there's a lot of cup and handle patterns, and there's a lot of charts that are setting up on weekly charts. And we know that a lot of investors might not look at charts day over day, but they look at things on a weekly basis. And I think that deserves some attention here today because it's, you'll see as we'll look at, there's so many examples right now. I think it's, we're missing kind of some of the charts if we don't really look at it. Now, remember when we talk about this information, it's provided for general informational purposes only. When or if we talk about options, remember that options carry a high level of risk and are not suitable for all investors. When we also talk about examples, we will do them in the Paper Money software application for educational purposes. And also remember that investing involves risk, including loss of principal. Now, today we're going to talk about, I want to kind of just talk about prices first, okay? When we talk about prices, we'll talk about indexes. And then second, we're going to actually take a look at some of the sectors, just kind of see, has there anything changed, okay, from last week? And what we're going to do is we're going to talk about a number of examples. Now, historically, I don't really bring up as many examples as I will here today, but today we're going to look at a number of stocks, okay? And we're going to look and kind of see, are they setups or how might an investor or trader approach these setups? So first off, let's go to our trusted list. And I just want to kind of point out some things that are standing out a little bit. Well, so first off, when we look at the S&P, NASDAQ, Russell, Dow, we are still seeing that we kind of have that trend 4, okay? Now, again, if we see a lot of trend 4, it's probably telling us we're setting up maybe some channels, or we could actually say some flags after the bullish run. We could even kind of say that they're kind of symmetrical / pennant patterns, okay, as well. So this is kind of, or we could actually see that we ran up, we kind of pulled back from the high, and we kind of fell down, and we're kind of scooping back up to the high. This is a lot of what we're seeing right now, okay? So when we see trend 4 does not necessarily mean bearish annihilation. It just means that the prices is up near the prior highs over the last week or two or so, okay? Now, if we take a look at this, something else that's kind of standing out to us is we got gold again, okay, hitting a brand new high. I told my wife on Saturday, I said, honey, if we knew we were going to be this happily married, we would have bought each other 2 wedding rings for each other. It would have been, you found the right person, but it was also maybe an investment potential decision, okay, as well. It's not just gold, but it's also high-ho silver as well. By the way, copper's kind of getting into that move. Keep an eye on that, okay? So when we look at the indexes, still in trend 4, we talked about it last week, a little consolidation. We still see that theme here so far. Now, when you also take a look at, let's say, the sectors, just briefly, sector list, we'll go to number 3. You pull this up, and I want to kind of just show, is there any difference? So first off, when we look at trend, same thing we saw in the indexes, which would make sense. We still see a lot of trend 4s, okay? Now, I want to visually show these. The only one that, for example, is we call it a sector, we call it a precious metal sector, is still gold there. We also see that utilities is also hitting a brand new high as well, okay? I think that's a sector that kind of gets lost a lot. People think, quote, it's boring. But you got to remember, not everything in your portfolio is probably meant to be something growth related per se. You might want kind of some more consistency, okay? Lower volatility, maybe some dividends, etc. And you're going to see the utilities of, if we're talking about compared to, let's say, Real estate, if we compare it to, let's say, staples, etc., utilities has actually been quite strong regardless. Now, let's pull up a couple of these charts just to kind of fast fire. Now, if we take a look at, let's say, the SPX, we pull this up. I mean, this is what the 4 looks like, right? That we're up near the prior high. It's a good thing that we actually got above the short-term moving average. It hasn't changed the color of the moving average yet, but at least we're trying to make a push. When you look at the NASDAQ, you're going to see it looks very similar. Again, if we're here on the NASDAQ, let's just take a look at why we're here. SOX did make a brand new high here today. We'll show a stock in that, or two stocks in that section here today. Why we're here, let's just take a look at just really quick the technology since it matches. Okay, it looks like the NASDAQ. SOX, though, kind of showing a little strength. Now, when we pull up the Dow Jones, is it any different? No, looks just like the S&P. Where you might see a little bit of a difference is in the Russell 2000. Russell 2000 fell down below that diagonal channel that we've had drawn for a while, and we're sitting slightly underneath it. So a little bit more weakness in the Russell 2000. Dramatically, wouldn't say that, but has pulled back a little bit from the high. It's down about 2% or so, okay? Now, I want to kind of fast fire also a couple sectors. Those sectors that we're going to kind of point out is I'm going to pull up IXC, which is the, $IXC, is the communications. Now remember, this is probably the group that people forget. Don't forget, okay? And you also want to be thinking about what type of stocks are in the communications sector. That actually hit a brand new high here today, didn't close there. Now, by the way, this is a question for you. Do you know any stocks that are in that group? Speak now, forever hold your peace. Ben, you're not allowed to answer. Now, the other area that I want to kind of point out is transports. Do not forget about transports. Now, I cannot pull up the ticker that tracks the transport section. We can type in $DJT. I don't think that's the same per se as the ticker I'd want to bring up on Friday, but keep an eye on transports. If we say transports, we could also bring up industrials. Industrials hasn't necessarily popped to a short-term new high, but it's kind of like right there, okay? So, and also last week we talked about the aerospace and defense, Lockheed Martin, GD, Raytheon, RTX, and so on. Keep an eye on those. Now, when we also say transports, okay, one of the number one stocks in that space, as far as allocation-wise, is Uber. And if you take a look at Uber, it's kind of had a little classic little double top, fall back down to the 95.82, push back up. Could it actually try to make a run here? Now, when we actually take a look, okay, now a couple of you are funny, mentioning a couple stocks. Yeah, so when we bring up the communication sector, okay, now we should know these almost by heart now, okay? Now I'm going to pull these up just real quick on myself, and I'm going to pull this back up, and I'm going to communications. Now, a couple stocks, okay? So the question was, what are some stocks that are in communications? Well, one of them is Google, okay? Now, Google, it's gone to like a different realm here lately, okay? You had not seen this type of a move for a while, took off the lid of resistance at 200 and just said goodbye, okay? That's one stock that's in that list. The other one that probably gets forgotten about is TTWO. Well, that was kind of your classic breakout, check back and a little bounce. That's to a brand new high here today. Netflix is in that list as well. Netflix, we don't see a breakout. The keyword is yet, but probably the biggest stock that you're mentioning, and I'm looking in the chat as well, is Meta. And if you look at Meta, what is interesting about Meta? Meta is kind of down at the bottom of the channel where if you're gonna get the bounce, and some people like to buy maybe off bottoms of channels potentially, Meta is right there. So, but one of the strongest stocks, we're talking about TTWO, and you got Google. Okay, now, let's also go back to just real quick some of these other sectors for just a moment. When we also take a look at, let's say, so we said transports, keep an eye on Uber, right? We talked about utilities. This classic, does anybody know what type of pattern that we see on the right-hand side? Anything? Any type of pattern you actually see? Okay. Now, if we kind of look, we draw down, right? And then we run back to the upside, then we fall back down, and we run back to the upside. Now, my gosh, that looks like a big tilted up W pattern. We should know better. And you're going to kind of see that this really has a higher high, okay? And look at that, the higher high, and then it falls back down to where the breakout was. And then what you're now going to see is higher low. Okay. I want to tell a funny story about Ben, but hold that thought for just a second. So it kind of looks like your classic, like tilted up W pattern, which is a higher low. And you're also seeing on the right-hand side, like a V type pattern. Now, if you looked at this on the weekly chart, it would kind of just even emphasize the point even more. Now, if we also go back to just real quick the financials, and a couple of you actually brought up a couple stocks in that space that I want to discuss, and we'll start there. When you look at the financials, those are still pushing up against the area of resistance, not falling down. We said before, we'll say it again, very difficult to get a recession in the stock market if you actually see the financials and industrials up near the highs. That continues to be a theme. You pull up discretionaries, those are actually still in an upward channel. The one group we want to kind of keep an eye on to see if we can't get a bounce after the breakout is really the energy sector. Crude oil down here about $2 a barrel. And if you actually look at that, Exxon, Chevron fell a little bit as 2-3% amount. Want to see if this can actually get a bounce here and get some legs underneath it. Now, let's go back to financials in just a second. What stocks and financials are kind of maybe setting up a little bit where we could talk about cup and handle type patterns and or weekly charts? Now, let's imagine that we say we know nothing, okay? And we said, look, the only thing we really know is if I go to MarketWatch and if I actually go to, let's say, Visualize for just a second, and all I know is I can pull up, let's say, the S&P 100, a smaller list of stocks. And what you're now going to see, if I click on S&P 100, I can click on financials. It's just going to magnify that section. Now, PayPal, and you'll see this in the chat, is up about 5.5% today. A pretty decent move for PayPal. Note that. The other one we want to keep an eye on, which we'll bring up, is BLK. BLK. Okay. Now, the other one that's coming into the S&P 500, it's actually in the S&P 500 now, that's hitting us between the eyes, okay, is really if I click on the S&P 500 and we go to financials. Now, if we go to financials, it just magnifies the section of financials. And the one that's kind of like doink is really Hood. Now, we've talked about this for weeks now, okay? The movement that we've seen in Hood, this is not your typical little push to the upside here. And what do I mean by that? Well, remember the pattern that we probably watch the most is probably W patterns and probably V patterns. Third to that, we probably say is like cup and handle type patterns. Well, what you're now going to notice on this, we've had a pullback here. We've had a run to the upside and a little check back. Now I want to tell the story about Ben. Okay, so I want you to imagine that Ben's driving his car, hypothetically. Okay, it's a theoretical example that maybe could have happened potentially. And Ben says old resistance becomes new support, like that. Okay. Now imagine you're riding shotgun. Okay. Now you might say to that theoretical driver, Ben, put your hands on the steering wheel, brother. Okay. Stay between the channel of the lines. Well, if we take a look at the Hood, what you're now going to notice is old resistance bounce, right? And now what you're going to see is this old high right there, old high, turning into new support. This is kind of like your classic stair stepping. Okay, run up, pull back, run up, pull back, run up, pull back. Now I'm going to tell you, it doesn't matter. So here's the deal. It doesn't matter how long you've been in the stock market. It doesn't matter. Okay. The biggest actually thing is, what did you learn from that time? And what you're now going to notice is when it runs up and pulls back, it pulls back to where the old high was. It runs up to a brand new higher high and pulls back to where the old high was. Now, the question that always needs to be asked is, how are you exposing that pattern? How are you seeing that and trying to take advantage of that? In other words, benefiting. Well, one of the things we're actually seeing is, it's up $10, 9% or so as it's joined the S&P 500, okay? And we talked about this on a fundamental basis, market cap basis, etc. But it joined the S&P 500, which is no easy feat, okay? Now, if you take a quick look at this, let's go to now here's the thing, you could be a great technician. At the end of the day, that's wonderful, but the question becomes is what type of strategy, stock, is it option? What type of strategy are you going to try to ride the technicals on? Okay? Now, if we said to ourselves, well, we could do a stop potentially, or maybe the investor says, with a percentage move like we've seen here today, maybe the investor says, I want to try to use the volatility to try to maybe buy or sell something. Now, higher volatility, some investors might choose selling options. If we go to the trade tab for just a sec, let me pull up the paid money cap, pull it up, and we're going to go to HOOD, and we're going to look and see what that implied volatility is. Now, the current position on there, because we talked about this before, is right here. We got, what type of strategy do we actually have on this? You got a 110 put, you got a 90 put. Now, Bush 85.31. Janelle, what type of strategy is that at the bottom? Luke, what type of strategy is that at the bottom? Joe, don't just sit there. Tell me what type of strategy that is at the bottom. Well, that's not your typical short wide. That's not like a classic short put vertical, would be tighter spreads. That is your cash secured pet with downside protection. Now it's sitting here at 77%. Now remember, bought this at 86 cents, closer to zero, and it's sitting here at 14 cents. Now, what we could do is say, you know what, could we hold that put? Maybe we don't need to sell it, okay? Maybe we still use that, but then get rid of the option, sold that for $4.15, it's at 88 cents. So this is where you sold it for $4.15, and it can only go to zero. Well, where is it right now? It's at 88 cents. So I need everyone in a Southern accent to say sell high, and buy back low. Now, here's the deal. It's not at low like zero, but we're trying to sell high and then buy low. Now, I love Southern. I lived in Kentucky, okay? And they're great people. Okay, it's just what it is. And some of you can't say that, but I need you to practice. Sell high, buy low. And so what we're trying to do is we're trying to buy this back, grab the 78%, create closing order, and we're going to buy that back. Now, what's the intention? The intention is we're going to profit take, try to, on that one, and then what we're going to try to do is going to try to sell another one. So if you said I wasn't here before, well, don't worry, because we're going to actually try to sell another one today, right now. Now, I'm going to create closing order, buy, and now what you're going to see is we're going to try to buy it at 89 cents, confirm send. Now, we're buying it at 89 cents plus the commission, and then what we're going to do is send the order. Now, what we're going to do is, since there's 18 days remaining, now we do not normally show this example of selling something or buying something with less than 20 days, but we're going to show an example of what happens if we do that. So let's kind of go back to maybe on the put side, selling a put with a delta of 30 to 40, okay? Now, what I'm going to do is I'm going to choose maybe like something in the middle between a delta of 30 to 40. Now, remember, delta, probability the stock could close below the strike, okay, by a penny at expiration, and or it's telling us approximately the movement, the stock goes up or down $1, how much does the option move up or down by, okay? Now, it's a model, okay? It's not exact. There's other factors that can influence the change in the option price. It's not just price by itself. What we're going to do is we're going to sell this 127. And what you're now going to see is if we sell the 127 for 440, now, by the way, when you look at why are we talking about a selling strategy, does anybody know? Gary, why are we talking about a selling strategy? Sharon, why are we talking about a selling strategy? Well, we're talking about a selling strategy because that implied volatility is at 63%, okay? Now, we could see where that is in the range, but if you kind of looked at most stocks don't have a 63 implied volatility, okay? That is up there. Now, whenever the implied volatility is up there, that's not all great and good. That actually means the stock could go up or down 15, Okay? Now it could go up 15 from now to expiration or down 15. That's the expectation. That's not actual. That's a forecasted movement. Could it be higher than that? Yep. Could it be less than that? Yep. And so the biggest thing here is, but the volatility is pumping the option premium. The bigger the premium, the lower the break even. The bigger the premium, the bigger the time decay. Okay, now, here we go. If we take a look at this, going to try to sell the 445. Well, actually, there it is. Confirm send, and there it is. So trade number one, we're going to sell Hood, the 127 put, 445. Okay, max profit, max loss. Now, this max loss is not including the fact that we already have the 90 put to the downside. This is only assuming that, hey, we're just selling a cash secured put by itself. Going to send that, and this might get rejected, and if it does, I'll fix it. No, it took it. Okay, good. Now, yeah, exactly right. So just remember, if you're confused on what's the point of the 90? The point of the 90 is actually to have protection of the downside. What's the protection? If you sell the put, you're a buyer at 127. You buy the put, you have a right to what? You have a right to sell. So if we have an obligation to buy at 127, you have a right to sell at 90, then you could do the math and seeing what that max loss is. Okay, so that's number one that we wanted to point out. Now, by the way, if we pulled up, let's say, Hood on that weekly chart, we pulled it up and said, what does that weekly chart look like? And I want to go back to here for just a second, okay? On this right edge, if we kind of said, what does this look like? Well, we see a big, massive pull, okay? And then on its right-hand side, a little sideways consolidation. Now, the reason I pull this kind of want to imprint this into your mind is, I think a lot of times we don't look at weekly charts. Friday afternoon, Saturday, Sunday. Okay, it would be a really good idea you look at these on Friday afternoon, Saturday, or Sunday. Okay, usually when you're starting into the week, you're probably not looking as much on weekly charts, but you probably should make a list of which stocks are kind of setting up on a weekly chart. What do you mean setting up? Setting up could be like a price pattern, a W, a U, cup and handle, or also a V pattern as well. Maybe it's a moving average crossover. Maybe it's just a breakout in general. All of the above, okay? Now, if we look on the right-hand side, what do I mean by this? If we kind of say, what was this? This was kind of like a sideways flag where we just kind of started to break above the consolidation area. Moving average goes green, and then we actually see a push. So we have the example, but I just want to kind of just adjust the position. And from that, what I want to do is, it's not in the IRA, that was in the margin, okay? Now that trade is not filled yet. We will keep an eye on it. We're only about 2.5 cents away from where the mark is. So we want to make sure that one kind of fills. Now let's go kind of fast fire through a couple Dow stocks, okay? Now, when we look at NVIDIA, now it's so easy when you look back and say, well, duh. You know, I could if I would have seen it, I would have gotten in, says the investor. Okay, okay, don't say so fast. Let's pull up an example that might be happening potentially right now. Okay, so what do you see on NVIDIA? I mean, kind of looks pretty similar, right? You see this little run to the upside and a little pullback. Now, here's what I love about technicians, and it's funny. Well, we don't know for sure what's going to happen. We're going to have to see. If it breaks out, that's when I'm going to get in. But then you ask that same investor, did you get in? Well, you know, I'd take puppy to the vet, had to get my car checked on. And so it's just kind of funny. It's like, where's the commitment? Where's the commitment? Okay? So in this, well, when we talk about these trades, we want to kind of say, how is the investor trying to take advantage of those trends? Not just look at them, take advantage of them. Okay? Now, here's the big thing. Let's not get so mad about this. But here's the goal. A lot of us have financial goals. And we're trying to reach those financial goals. And we're trying to actually say, well, how do I actually try to put myself in the path of trend? Now, number one is we can manually try to do it. Number two, we could use order types like buy stops, buy stop limits. Okay? We could dollar cost average. We could also set the alerts. And so what we want to ask ourselves now is kind of let's practice this and not just look at it in the paper money count. So when we look at this on the chart, first thing that we see, now remember, I'm going to tell you right now, if you want to get messed up, look at 5,000 stocks a day. Listen to me what we're saying. We look at the Dow 30, the S&P 100, the NASDAQ 100 on a daily basis. Now remember, grand total, the whole pot of stocks is like 190 stocks total, okay? Now, why do we actually look at those? Well, because they're the ones that are liquid. Number two, they're the ones that actually tends to actually have, when I say liquid, I'm talking about higher stock volume, potentially liquid options, potentially. You'd have to verify, but they're also something that actually has a little bit bigger market cap, and they also probably tend to be the ones that are actually owned by institutional investors that actually might create some big trends up or down to try to ride. Now, the biggest thing is, you're going to see on this right-hand side, the shorter term moving average going green. Now, we call that number uno. If the moving averages start to pinch, it's actually telling us that the likelihood of this going to 2 or green actually becomes higher and higher. And then if we get across, well, then you get 3. Okay. Now, again, that's so easy when you look back on it and say, this is exactly where I would have gotten in. 1, 2, well, actually 2, geez, messed up. 3. Don't be so overconfident on 1, 2, 3. So that crossover happened before the 20-period moving average. Okay. Obviously, I need to practice. But it's so easy when you look back and say, yep, I would have rode this trend right here and I would have done this X, Y, Z. Well, let's kind of practice going now. We're in 1. So how many of you like to get in on entry setup number 1? How many of you like that? How many of you say, no, James, I'm not going to get in on 1. I want to get on 2. And then if you actually said, I like confirmation. I want to actually see that happen before I get in. Now, the one thing we got to remember is we get dollar cost average. What if we said, look, we'll get in a third if we get setup number 1, and enter another third when we get 2, enter another third when we get, let's say, 3. It's one way to do it. You could also say, look, I'll get in half if we actually get in number 2, and I'll buy the other half of the position if we get in number 3. So there's some choices here. Now, I wonder if you actually said, okay, let's take half a position. Now, let's go back to this. When we look at this on a daily chart, why are we talking about kind of a continuation pattern? Well, remember, if you take a look at this, we're going to go back to this area of resistance, and let's kind of show the example of a stock trade. Now, what we're going to do is we're going to imagine in this, let's go to the IRA, and let's imagine the IRA, our position size was, for each position, was $7,500, okay? And what we're going to do in this case is we're going to buy $2,500 here. We're going to right-click on the chart, buy custom with OCO. Well, let's go with stop for just a moment. If I go with stop, we're just going to say capital size. If every position, if we had a full position, 7,500. If we split that in thirds, it would be $2,500. Well, $2,500 is going to be about, well, 13 shares, maybe 14 shares. We'll round up to 14 shares. Now, what this is really doing is kind of sticking our big toe in the water. And if we start getting that trend 2, or the step 2, then the investor could add the second piece, example given, and if they get 3, they're adding more. The theory is kind of like if it shows more confirmation of trend, the investor shows it more capital, okay? Now, does that guarantee the stocks can go up? No, but they're just dollar cost averaging based upon what they see on the technicals. Now, what I'm going to do is I'm going to go back to where we had this consolidation about 175 and change, 175.62-ish, less 2%, and that stop is going to be 172.10. Now, if we did this, we're kind of just checking it out. We're seeing, can it break out to the upside? Now, if it's wrong, okay, well, it'd be about a loss of $9 on 14 shares. You do the math and say if we're wrong, 14, 9, it's about a potential loss of 126. Could it be more? Sure, okay. Remember, that's a trigger to sell. That does not guarantee that's exactly where it's going to fill. That's the stop price. We need to see where it's going to fill. Now, we're going to send the order. Okay, now notice what we're going to do here. We're trying to buy some shares around where we are now, and then we have a stop underneath. This is one that we're going to kind of keep an eye on to say, look, can we see the weekly chart start to turn? So when we say that, what do we mean by that? Well, we got one right now. That's why we did a third of the position. If we get red on, we get the 20-period moving average to go green, 2 and 3, the crossover, etc. That's going to be one that we kind of keep an eye on. Now, another Dow stock, again, not very hard to find it, is if we kind of said, is there another stock that might be showing a bull flag type setup? Yours truly, Johnson & Johnson. Now, Johnson & Johnson had a big move to the upside. Flag back, or some of you would say fleeg. And what you're going to see is on Johnson & Johnson, that is also really 1. And what you're going to notice is right there, 2. Now, when you say 2, I can't see the moving average. That daggum high is in the way. Well, let me move it out of the way so we can see it. It's right there. Now, we got an earnings upcoming, and it's on 10/13, 10/14. So there's still about 2 weeks here where some investors might speculate what might happen. Now, speculation causes some investors to maybe trade it, long, short, neutral range, causes some potential activity sometimes. Keep an eye on that. Now, the other one I want to kind of also make mention of is Microsoft. Now, when you look at Microsoft, it too kind of has that same similar pattern. Big run to the upside. There's your pullback. There's 1. Notice the moving averages are starting to pinch. Earnings is coming up really at the end of October. When we talk about earnings type trades, we are normally talking about those trades 3 to 4 weeks prior to earnings. So it allows some time for some investors to put some positions on and speculate which, maybe if it could actually run up in the earnings, maybe does it sell off into the earnings, and so on. Now, what we're going to do is on Microsoft, let's go back to the daily chart and kind of see what we have here. Now, what you're now going to notice is, I'm going to kind of show you some little differences here. Let's say the investor says, James, I don't want to get in unless we get above, let's say, 517 and change. Fine. Could we show a little bit more commitment to that, though? Like, I mean, because we could just say it on anything. I want this. Okay. Well, what would you want to see to get in? Well, I'd want to see it get above 517 and change. Okay, so what type of order would that be? Buy, stop limit. If we actually said, well, how high do you want it to get before the investor commits capital? Well, I'd like to get to, let's say, 520 and then get in and set the stop underneath this recent area. Okay, so now we're sounding like the rubber's starting to meet the road here. Now, what I'm going to do is I'm going to right-click on this chart right around 520, buy custom with OCO bracket. Let's say we said, hey, we're going to do like a half position. Let's say the investor said, look, I'm going to do 3750 of capital, okay? And if I did 3750, that's, by the way, that's the dollar amount, okay? Make sure you're clear on that. 3750 of capital is about 7 shares of stock. The pool, I call them pool balls. Let's say 7, okay? 7 shares, which is about $3,500. We're going to say limit, stop limit. Now, I'm going to tell you right now, we need to get comfortable with this type of order, okay? This is saying if we get to this price or higher, get in. And then what we're going to do is we're going to place a cap. Now, we could say, look, I'm going to set a tight cap, maybe 522. So it's saying, look, it has to go above 520, okay? But it cannot buy the stock any higher than 522. So it puts a band around where you are comfortable to buy it in the paper money account. And now what we're doing is we're saying dated GTC. Why GTC? Well, because I don't know if it's going to do that today, tomorrow, the next day, or ever. So what we're now doing is we're just putting a cap, okay? In other words, the investor says, look, I'm interested in buying. I just want to clear resistance. And I think this order, if you think about how many stocks the investor has missed, understanding this order and getting comfortable with it, you think about how many times you missed breakout trades, not saying all of them work, but if they just got comfortable with buy stop limits, they might have not missed as many. Now, if we went back to the prior high and said, could it go back up to the top? I'm going to put 550, and the stop underneath, we're kind of looking at the 507. Now, remember, the target and the support area, it doesn't matter where that stop is. We need it to fill first, okay? Now, dated GTC. Now, you might be thinking, well, okay, so from today, what are we trying to extract out? Answer? Man, we want to actually look at charts where they're not just daily setups, but where there's weekly charts that are really starting to show a setup pattern as well. If you could get the weekly charts and the daily charts to align, there might be not just a short-term trend, but like an intermediate trend as well, okay? Now, what I'm going to do is trade number, we'll see in just a sec. I can't remember, is it 2 or 3? Microsoft, there it is. That's a GTC order, okay? So we need the price to go to 520 or higher up to 522. That's the cap, okay? Got a target. Now, the target matters if we have to enter first, and if the stock enters, and then there's the stop. Remember, if the stock goes down to that price or less, then sell, and it could be sold at a lower price. Send the order. Now, I also want to go back to just real quick another one. Now, if we said Dow stock, that is kind of showing a weekly chart setup. Now, remember, let me repeat myself, and I'm doing this on purpose, okay? We talked about seeing W patterns, right? W patterns, okay? We talked about, for example, V patterns, and then we also talked about those cup and handles, which, by the way, you could actually kind of say that a cup and handle, and by the way, that might come up a little bit higher. A cup and handle kind of looks very much like a tilted up W pattern. Fair, okay? Now, if you look on this chart and say, what does this look like to us? It kind of looks like a big old U pattern. Now, anyone that's sold out right here, right, all they've really seen so far is the stock go right back up to the prior high. Now, if anyone bought on the right-hand side, why did they buy, right? Well, they were trying to take advantage of a breakout, crossover, bounce setups, right? And if someone's buying, let's say, where they were on Friday, why are they buying on Friday? They're buying on Friday because they actually think it's going to take out the high. Do they know for sure? No, okay? They're speculating, okay? Now, the significance of these type patterns, especially the U patterns or these cups, is we really kind of get, in this case, a pattern where we can measure the width, okay? And if we measure, let's say, that width, it's really going to be about, if we kind of said, what's the cup? Let me stop that. Sorry. Wrong stop. Okay, there we go. Just need to come back to something for just a sec. Grab that pencil. Now, if we take a look at this, if we looked at this, and I just want to see if that pencil's still working. We got it or not? It's off. Fine, we'll go back to old school. Well, this is 250. If we go down to 250, let's say down to, let's say even say 200, that's a 50-point cup. Do we know for sure that it's going to go up 50 after the 255-ish? No. Okay, now, could investors speculate? Oh, sure. Okay. Now, let's kind of go back to something for just a second. So, from the resistance to the bottom of the cup, it's about 55, okay? Now, if you zoom in on this, when is the earnings upcoming? 10:30. Now, remember I said before, usually when investors start to speculate, it's 3 to 4 weeks prior to the earnings. And that earnings can cause investors to speculate, bounce the stock to the upside, break it out, break it down, and so on. If we actually break out above this 255, it might try to run up prior to the earnings. Now, let's go back to this for just a sec. Let's say the investor said, you know what, James, I want to kind of trade something that might, and I want to kind of look for liquidity, first off. If we looked for, let's say, liquidity, you're going to notice that the volume here is about 34 million so far on the shares today. If we said, hey, let's look at volume in the open interest for the October monthlies, anything that really stands out, the 130 stand out, that stands out for sure. The 132s, the at the money calls, this stands out. 50% of the volume, 50% volume compared to the open interest on the 135. So maybe a little speculation on the 130, 132, and the 135. But if you come down to the Novembers, look at the volume here compared to the open interest, volume compared to the open interest, volume compared to the open interest. The higher the percent of option volume compared to the open interest, getting a little speculation, bullish or bearish. Now, in our case, what we're going to do is we're going to buy the 130 call. Now, if you buy the 130 call, of course, you want the stock to go up. Else, why would you buy it? Now, what we're going to do in this case is we're going to buy the 130 call, but then what we're going to do is we're going to sell the 140. Now, if you buy a call, you have a right to buy the shares at 140, and then you actually are selling the 140. $10 wide, debit, 445. Okay? Yeah, gummit. I hate when that happens. It actually happens when I switch it over. By the way, that discussion on option volume, it still applies. Let's go back to just real quick. Sorry about that. Now, by the way, the reason why I didn't throw me off initially is still some decent volume compared to open interest. Let's pull this back up. This is what I mean. It kind of is still some pretty high volume. Okay. Yeah, annotation is just not wanting to annotate today. Okay, good. Now, if we go back to the Octobers, still 6,000. We're on Apple, okay? And what you're going to see is 19,000. 4,800 compared to that, still pretty high. 3,700 compared to 13,000, okay? Remember, volume is looking at today, okay? Now, when you go down, you're still going to see thousands on the open interest. Now, this is not going to change our mind on the strategy. If we chose the at the money call, okay, which is the 250, we're going to right click on that 1245 buy, and then what you're now going to see is vertical, okay? Now, when you take a look at this, if we bought the 250, and what we're going to do is we're going to look at the Novembers. We bought the 250s and then we sold the 260s. There's still 19,000 contracts and a 10-cent bid-ask spread on those. We're going to do the 250, 260. Now, by the way, the example I actually pulled up before was on Hood. Could that be an example of long call vertical as well? Well, it's just another way to be bullish, okay? If we look at Apple, the 250, 260 call, $5 wide credit in this case, and that's not going to be a credit, so we need to flip that around. There we go. 250, 260 debit. You're now going to see there's the debit, break even, okay? So we have the right to buy the shares on Apple at 250. The right is not free. It's a net cost of 502. That's prior to the commission, and there it is right there. How much money is set aside to do the trade? It's whatever the max loss is. All right? Now, but just remember what we talked about in terms of volume and open interest. The option, when I say volume here, I'm talking about the option volume. If you actually see that, that's another way that you could be thinking about our investors speculating, causing people to buy or sell options. The speculation is not just on stock volume. So I'm going to send that. Now, what we're going to do is when we go back to this and kind of say, okay, what trade filled? We got NVIDIA that actually filled. The other working order that we have to make sure that gets filled is Microsoft. That was the second trade. And the third trade we actually did here is Apple. Now, I got about 30 seconds here, but I want to kind of fast fire a couple other stocks that we might keep an eye on. We've mentioned Uber, okay? The focus I want you to do for homework is look for stocks where the weekly charts are setting up with the daily charts. We also see that we talk about BlackRock. That's more of a continuation, maybe a little continuation pattern on that. We see Datadog as well, kind of maybe a little slant, an inverse head and shoulder, diagonal breakout, which we talked about last week. We see a stock like Dash, Classic kind of cup and handle pattern itself. Travelers, you're going to kind of see is a little symmetrical triangle, but still up near the prior high. That might be a continuation. Keep an eye on that. We also, for example, if we pulled up any others that might be showing that, Monster, kind of like a little tilted up W pattern. And the last one is CrowdStrike. Prior high, a little cup, and coming off the potential handle piece. Your homework is to go out there and find some stocks where the weekly charts are setting up and those daily charts are confirming what's happening on the weekly charts. Cameron May will be coming up next, talking about cover calls and cash secured puts. I want to say thanks to Ben Watson and thanks to all of you for answering those questions in chat. We also, for example, in asking those, and we try to answer as many questions as possible. Remember that also coming up next, Cameron May. And also a quick reminder that I'll be back on tomorrow at 11 a.m. Eastern on Investing Master Series. Also, Ben will be on tomorrow morning, so stay tuned for that as well. Remember, with what we discussed, it was done for example, illustrative purposes only. Thank you, Ben, and do not forget to subscribe to the Trader Talks channel. That way you can see all of our content there as well. And this has been the class on trading with technical indicators. With that said, have a great day. Thanks so much. Take care. Bye-bye.